When you look at raw market data, the sheer volume of noise can be overwhelming. Thousands of trades happen every second, creating a chaotic environment where finding clear signals feels impossible. But ancient methods exist to cut straight through that noise. Our objective today is to step away from traditional bar charts. Instead, we are going to build a highly actionable hybrid trading setup by combining Eastern candlestick reading with Western technical analysis. To follow along, you only need two things: access to standard charting software and a basic understanding of the 4 daily price points: the open, high, low, and close. Moving from simple lines to visual representations of market emotion is a crucial first step. Step 1 is to change your software settings. Go into your chart options and toggle the display from standard bar charts to candle charts. It is important to know that the underlying market data remains exactly the same. Both formats use the exact same open, high, low, and close points for any given trading session. The central real body reveals market control. In a white candle, the bottom is the open, the top is the close. Bulls control. In a black candle, the open is the top, the close is the bottom. Thin shadows represent intraday highs and lows. By focusing on the shape and color of that real body, you turn raw numbers into an immediate, intuitive map of market psychology. Memorizing these individual candle shapes is totally useless if you ignore the power of the overarching market trend. This diagram shows a classic hammer reversal pattern, identified by its small real body and long lower shadow. But there is a strict rule. A hammer is only a valid bullish signal if it appears after a confirmed market decline. Now, contrast the hammer with the hanging man pattern. Visually, they look absolutely identical. They have the same small real body and the same long lower shadow. Here is the major point of failure for beginners. If this exact same shape appears at the peak of an uptrend, it becomes a bearish warning sign, not a buy signal. The context and the trend dictate the validity of the pattern. Charting requires subjective analysis of the whole environment, rather than following rigid rules based on a single shape. Candlestick patterns are highly effective, but they are not meant to be a standalone system. They work best to enhance your existing strategies. This brings us to the cluster of candles. This occurs when multiple candlestick signals emerge close together in a specific price area, stacking the evidence. Layer your favorite Western technical tool, like a flat resistance line, directly over your candlestick chart. Look for synergy. When a bearish candle cluster aligns perfectly with a Western resistance line, the probability of a successful trade increases significantly. Seeking this specific convergence separates disciplined, systematic traders from amateur guessers. There is one critical limitation to acknowledge. Candlesticks provide excellent entry points, but they do not provide price targets. We compensate for that limitation here. Before taking the trade, use a Western tool, like a bull flag pattern, to calculate your specific exit target. Then cap your downside risk. Place a protective stop-loss order immediately below the lowest shadow. Step back and weigh the potential upside of your Western target against the strict downside risk of your candlestick stop-loss. Forcing yourself to define both risk and reward guarantees you only execute trades where the math is heavily stacked in your favor. We now have a complete workflow. Read market emotion via the real body, confirm the trend context, look for Western convergence, and strictly calculate your risk against your reward. These exact techniques are universal. They work flawlessly whether you are day trading on a 5-minute chart or analyzing macro trends on a weekly chart. Now it is your turn. Open up an old chart and review your past trades through the lens of candlesticks. You will likely spot the warning signs you missed before. Mastering candlestick analysis provides a direct window into the psychological battle behind every price movement.